What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. Welcome back to Real Estate Investing Demystified.
Welcome back. Are you saying that to us or our listeners and viewers? It just felt like you're welcoming me back.
I just get so excited every time we come back because, you know, we've been so busy with what's going on in our world, our move to Florida. Now we're actually boots on the ground and we're touring properties like crazy. It's really exciting times.
Yeah, I think yesterday was like 14 hours of driving for me.
Yeah.
So, you know, what was it? 6 hours up to Jacksonville from Naples, 6 hours back, and then a couple hours of driving around Jacksonville. But it's very interesting. A lot of deals there in the market. There are some distressed deals coming into the market as well.
Yeah.
What are we, September 14th, 2023. So interesting to see what happens. The whole landscape for multifamily value add is changing. Yes, today we're looking at people who bought deals at sub 4 caps and 70s deals at sub 4, in some cases just above 3% cap. Yeah. So we're looking at that today and thinking that there must have been some insanity at that time, but at that time it was making sense. It seemed like the train was never going to stop, but reality is kicking in, and now there's some groups that are in distress, and
we'll see what happens. I'm more focused on the equity side of the business, and I have investors reaching out to me every day saying, "Hey, Ava, where's the distressed deals at?" Because they're watching the news, they're seeing what's going on, and they know that there's some good opportunities coming our way. So
yes, talking about good opportunities right now. Yes, talking about good opportunities and great deals coming our way. I'm very excited about our guest today because he's going to be talking to us about a new exciting asset class underneath the commercial real estate umbrella, which historically has been multifamily, office space, is hospitality, and industrial. All of these asset class. This is a somewhat of a new asset class, a new business model within this space. So I'm very excited about our guest. So why don't you go ahead and tell our viewers and listeners a little bit about our guest, Ava?
Absolutely. All right, everybody. Today we're going to be joined by Damon Healey. He's the founding and managing principal of Eternal Companies, brings 2 decades of real estate experience across various sectors, including hospitality, retail, multifamily, and more. So his notable achievements include expanding Brookfield's Asset Management extended stay hospitality portfolio and overseeing Lidl's US's $1.8 billion expansion. So Damon holds degrees from Oklahoma State University and the University of Michigan. So we believe this interview with Damon will bring great value to investors looking to learn about this exciting new asset class of real estate, extended stay hotels. So welcome, Damon, to the show.
Welcome, Damon. It's Damon, not Damien. Damon.
Correct. That's correct. No, that's a common error, but you guys got it right the first time. So thank you. But thank you for having me. This is happy to be here.
Of course.
Awesome. Damon, can you start out by telling us about your background and how you got your start in real estate, please?
Sure. So my background goes all the way back in early college. I actually did my first real estate deal at 19 years of age. I got a very small loan from my dad and, bought a piece of land and tried to build a house, but I couldn't get a loan from a lender. So I ended up flipping it to a builder who ended up building a single family home on that. But I made a profit, paid my dad back, and used that money to seed future investment opportunities. So I got bit with the bug early. I had family in construction. My parents built a couple of homes and things like that. So I would go tour houses with them. But really caught my eye was I would go to baseball games with my dad and see the skyline in center field on the stadium. And I always said to myself, I want to own one of those big, tall buildings one day. And that's what kind of spurred me on in my career. So went to Oklahoma State, got out, got a job at Marcus and Millichap, real estate investment services. Found out pretty quickly I didn't want to be a broker. nothing wrong with it. I love my broker friends, but that wasn't me. I didn't want to do that, and got into investment banking right after that. After about a year, KeyBank Real Estate Capital, I was an analyst there for about 3.5 years, right ahead of the GFC, but all commercial. We were basically sourcing CMBS loans and life company loans, and we also were a DUS lender, so we did agency debt for multifamily. So it was a great foundation for really seeing all types of real estate deals, financings, as well as evaluating balance sheets of owners and lenders. So it was a great foundation for me. And then the great financial crisis hit during that time. We were in CMBS. We were, in that entire world. And so I kind of saw the writing on the wall, applied to graduate school, and went to Michigan. And then after that, I've always wanted to be on the ownership side, always dabbled also on the side, even while I worked my jobs into single family. But, wanted to be on the ownership side, started working with a developer after graduate school, in the actual Detroit area. That's where I'm from originally, the metro area. But, this was pre kind of the comeback of the automotive industry. Obviously, the automotive industry was a part of the great financial crisis. So it was sort of early coming out of that, and said, I don't think this is going to work. It's not fast enough for me. I'm an ambitious guy. So I ended up moving to the East Coast. A professor linked me up with a developer actually here in Washington, D.C. And the owner of that business had raised, actually did a joint venture with a company called McFarland Partners, and they had raised about $120 million with the California State Teachers Retirement System. So I was brought on to help deploy a lot of that capital. We did multifamily in and around the district, both value add, core plus, and ground up development. So again, really learned my chops there in the development world and acquisitions world. The CEO at the time gave me a lot of responsibility. So I'm very grateful for that. Then got recruited by Lidl. Lidl was Europe's largest grocer. They are in Europe, I think in about 34 countries in Europe, several 100,000 employees, and they actually came to the US, and I was actually employee number 5 here in the so it was 5 of us in a room, I like to say. And then a couple of years later, we had several thousand employees, across the East Coast here in the US. Did that for a while. We opened our first stores basically from nothing. We were buying land and later did some leasing. Had a big team there, and then was recruited by Brookfield Asset Management to basically scale their extended stay platform throughout the country. And so that's kind of what brought me from sort of 19-year-old to well in my middle age now, to be in the extended stay business.
What year was it that you got started in the extended stay business?
Yeah, that was 2018, 2019.
Okay.
Yep.
Got it.
Somewhere in there.
And to our listeners who can't see Damon, he actually looks pretty young. So he talks about GFC.
Yeah, you look great, and your picture makes you look really young as well. So we were having this conversation before the show, but yeah, the beard's doing it for you. Let's dive into the questions, Damon. I'm really excited to learn more about extended stay hotels. Can you start off by explaining what extended stay hotels are and how they differ from traditional hotels and other types of real estate investments, please?
Sure. So the way I define it, I think it's a loose definition, but I define it as hotels with kitchens. And so within the industry that, you can have a higher end extended stay hotel or an upscale or a mid-tier hotel, or you can have an economy hotel. What I have focused on in the past with Brookfield and today is really that economy to mid-scale segment. So for upscale, think your Residence Inns, think your Element by Marriott. Mid-scale is probably your traditional Candlewood suites, Home2 suites, things of that nature. So at Brookfield, we actually acquired 100 WoodSpring suites. And that's a Choice International Hotels brand. And so, but that's basically hotels with kitchens where you can stay a longer duration as opposed to your nightly hotels.
Right. And is there a maximum duration of stay that someone's allowed to actually stay there for?
Well, that varies by jurisdiction,
Okay.
but often you will see. I can talk most specifically about economy and mid tier because I think that's where the action is.
Mhm.
But what you typically see is, you have at least a base of about 20% of those hotels that are what you call long-term guests, folks that may be relocating to an area, and maybe have just decided to continue to live there for actually a longer period of time. And that would be longer than 30 days. You have folks staying in
Okay.
some of these hotels, even, 6 months, a couple of years, things like that.
What's the average stay?
Yeah, it
Yeah.
was about 14 nights. 2 weeks would be the average for the economy to mid scale, and then the
Okay.
higher up you go in the tiers, it drops off, and it becomes, think about, the Newtown Place Suites or any of the Residence Inns. Those are effectively nightly hotels. I've stayed in plenty of those in my travels. I know you're traveling. I heard you were traveling throughout Florida. That's been my life as well. But sometimes you want a kitchen and you want that
Yeah.
option if you're going to have family with you or friends with you and things of that nature.
Got it.
Yeah.
Got it. So do the consumers of this particular accommodation, do they seek hotels which have this option of extended stay, or is it known that every hotel you can just stay longer? Or can you get better rates when you go to extended
Mhm.
stay? Talk to us about that.
Yeah, so the demand is there for customers who want what we call purpose-built hotels, or hotels with kitchens. And what you find is customers value their discretionary spend as it relates to the rate. So just say you have to stay in a location, say you're relocating and you're building a house and you need a place to stay. Well, an extended stay hotel would be the right solution. Airbnb is also another solution, but some people enjoy sort of the consistency and of just having that extended stay hotel and being able to have more discretion on the rate. So what you find is the rate is a little bit lower in the economy and mid-scale segment, but if you want to have breakfast in the hotel, you can do that. If you want to have
Mhm.
lunch outside, you can do that and know you're going to cook dinner inside. And so what you're typically doing is trading rate for that discretionary opportunity to go to the grocery store or whatever and have that meal in the room.
Got it.
But typical customers, you're talking about relocations, you're talking traveling nurses, you're talking construction workers
Mhm.
that are coming to the air for big expansion or infrastructure projects. So some of the federal bills that have been passed are going to be, excellent for this segment of hospitality.
Got
Right
it.
on. Okay. Okay. Now, Damon, how does extended stay hotel market compare to other segments in the hospitality industry in terms of like demand and growth potential?
Yeah, well, really, extended stay is the hottest segment within all of hospitality right now. And the reason is because of the profitability of the space. Typical gross operating profits within the extended stay category are 50 to 55% plus. And so that has driven a lot of growth. The other reason is demand. 70% of all extended stays are actually in non-purpose built hotels without kitchens or amenities that allow you that discretionary spend. And so that's really the long-term prospect within the space. And so it's the fastest growing area of the segment and arguably the most profitable.
Got it. And now, do you have any KPIs as far as as far as like what is an average occupancy within your conventional hotel, and then to kind of compare to extended stay, how does that work? Like how much occupancy do they need to have for them to be in a cash flowing position and what have you? How does if you compare the
It- That's a great question. I would say it depends by segment. And it depends which category we're talking about. But again, I'll focus on the economy to mid scale. Within that, you're really looking at occupancy that what we call over indexes to the market. So in a lot of markets, you'll see occupancy well over 100% of the nightly hotels. And so a lot of your RevPAR, your revenue per available room, is driven by that occupancy. And so when you think about these economy to mid-scale extended stay hotels, it's really a housing alternative, similar to short-term rentals and Airbnbs and things of that nature. But because of that average length of stay, and that's what you're really looking for, you're looking for that higher occupancy, a longer length of stay. What that does is it allows you to lower your expenses. So your staff is not cleaning those rooms every night. They're cleaning them sometimes on average once or maybe once every other week. And so all of that reduced expenses drops to the bottom line, and that's where you get your higher gross operating profit.
Right.
Got it. And if you had to fit in extended stay hotels within the the hospitality and multifamily, let's say, where would it fit in? So is it competing with Airbnb? Is it sitting between multifamily, Airbnb, somewhere in the middle for people who
Yeah, it's a great question. I think it sits right in between your traditional multifamily 12-month lease and your short-term rental, but really everywhere in between. And that's going to vary by market. You have some markets that are just going to be a little bit more transient. They're going to have more nightly guests. So for example, demand drivers that we look for are military bases, for example, or hospitals. We also look for, again, major construction projects, but also amusement parks. Like a hotel I developed in Orlando does very well. You get a lot of international travelers coming there for a week, 2 weeks at a time, and they just want a consistent, lower cost experience because it's expensive to go to Disney for a lot of people.
Yeah.
A lot of people save up for a long time to go there, and they don't want to spend it all eating out. They want to have cereal in the morning and things like that, and be able to have their dinners out when they're at the parks, for example. So that's a great example. But really any location that has a lot of growth. We also look at multifamily in the space. For example, if there's a lot of multifamily growth, particularly rent growth in a market, that's usually a prime opportunity for an extended stay hotel, because chances are if there's rent growth, there's a lot of relocation to that area. Someone may not know exactly sort of where they want to land. Maybe they have a new job and they are going to scope out the area to figure out where they want to live, or they're waiting on an apartment because the apartment market is really hot. So now they have to wait 3 months maybe for a hotel. So they need a place to stay. And Airbnb can often be more expensive than economy or mid-scale extended stay hotel. Another thing that's attractive about it for the guest is they can buy that rate down. So if we know they're going to stay there for a week, or they're going to be there for 2 weeks, they can actually get a more discounted rate as a result of that.
Nice. Damon, what locations are you focused on right now?
Yeah, it's I get asked that question by investors all the time, because I think it's a more of an opportunist. Personally, I think it's more of an opportunistic marketplace, because depending on really what you're doing, you can. At Brookfield, we had 100 hotels in 35 states across the country. So I just have that knowledge that you can really make it work in many markets as long as it has the growth and as long as it has the demand drivers. But like everyone else, you're focused on the growing markets, the southeastern markets. I particularly actually love high barrier to entry markets. If you're looking at development, for example, mid-scale and economy extended stay hotels can be tougher to develop. So for that reason, if you find a high barrier to entry market where you can actually develop that hotel, you really have that moat around that hotel. So I personally love that opportunity. But outside of that, you're really looking at growth markets where, just like everybody else, probably.
That makes a lot of sense.
Got it. Now let's talk about, I obviously with the boom of multifamily over last decade and what have you. I mean, the boom has been there for a long time, but the type of cap rates that you could, multifamily is being traded at, you're seeing a lot of hotel to multifamily conversions.
Mhm.
Does a your standard hotel room, can that automatically be converted to an extended stay? Does it take some form of needed construction to be able to bring it to that level? You talk about ground up development, so I understand that you can build these types of extended stay hotels. But if you're looking to convert, a hotel to an extended stay, could it go the other way around? Could a multifamily apartment community be converted to an extended stay? Talk to us about the conversions that exist within this asset class.
Yeah, I've personally not really seen multifamily convert into extended stay. And typically, your highest and best use is going to be multifamily. It's going to be more valuable to keep it as multifamily. What you are seeing, however, is a lot of extended stay hotels being converted into multifamily because of the housing shortage across the U.S. Not sure as much about Canada, but I know at least in Toronto, there's a serious housing shortage because we looked at Toronto. Brookfield is located there. And so there is a lot of activity around extended stay to hospitality conversion because the kitchens, the plumbing is already in the box. And then, particularly in the state of Oregon, where we were developing and expanding, there have been really just dozens and dozens of conversions. You have housing authorities buying extended stay hotels. You have funds being created around extended stay hospitality to convert those to multifamily. But you definitely have to watch out for the construction costs there. Obviously, the building standards are a little bit different. You have to watch out for sprinkler systems, whether or not that needs to be installed into the units. So, it's because, most of them are sort of studio, and less
Micro suite type.
micro suite. If you can find a older generation residence in, maybe you can get a 1 or 2 bedroom unit mix in there as well. But typically you're looking at studio units. So you really have to be careful on the construction costs, I think, when you're converting these. But lots of activity. And I know I have buddies right now that are doing this, and it's been extremely profitable for them.
Got it. So I mean, it might be a difficult question, but if you have a property that can be your conventional hotel, can be easily converted to an extended stay, or it can be converted to a mainly 1-bedroom multifamily, where would be the best bang for the buck for that property to be utilized? Is it still multifamily gives still the highest yield?
Yeah, absolutely. Because I think, you can buy on a price per door, you can buy older extended stay properties much cheaper than you can buy multifamily, right? So if you look at your spread of construction costs and what your ROI is on that, that's what I would be targeting in that case. And you can do that also with more traditional hotels. You have to watch the dimensions of the box and to make sure that the plumbing works and all of that. But really, I personally, if I were doing it, I would be targeting extended stay hotels and looking to convert because, the yield on that change of use is much higher than maintaining an extended stay box.
Got it. Talking about yields, talking about, let's talk about investor returns. Are these extended stay type of projects, ground up development or value add or potentially opportunistic, are they being syndicated? Is there any funds that are focusing particularly on this business model that you know of? I mean, tell us about yourself if you're getting involved in any of that.
Sure, absolutely. So most of the extended stay world is really, friends and family capital coming into the space. You have other hotel operators and other segments that have pivoted into extended stay. Frankly, you have a lot of multifamily self-storage guys that are into the space, and they're doing syndication deals. That's the vast majority of the space, I would say. More recently, you do have, and now we're talking, just sort of your one-off deals, whether it be conversions or development. More recently, though, you do have a lot more institutional joint venture type capital coming into the space that have been active and more recent, I would say over the last 5 years or so. Blackstone has been in the space actually for about 25 years or more. They
Wow.
actually own Extended Stay America outright. Starwood Capital Group also owns a hotel group called In Town Suites outright. I think they're both now joint 50-50 joint partners on those, but they have been in the space for years because of that profitability. Traditionally, you've been looking at buying or developing extended stay on, a trailing 12 month of a 10 cap. So, pretty good when you consider, and you're looking at new development, you're looking at IRRs well north of 20% traditionally. Obviously, so Brookfield and Starwood just bought Extended Stay America in 2021 for about $6 billion. At Brookfield, we sold our portfolio to them in 2022 last year. And so we exited that portfolio last year. And that kind of, spawned a new wave of more institutional investment within the space. So those cap rates have compressed. However, because of rising construction costs, because of rising interest rates, development slowed down. Because of the lack of supply of extended stay in the market, new development opportunities are slowing down. That's where I think now, and what I'm doing is really targeting those conversion opportunities that are still cash flowing close to that 10% today, and then probably transitioning to those existing hotels into different brands. And sometimes that can come with incentives from those brands as well, which would also sweeten the pot.
Got it. So comparing it with multifamily and a value add business model, when you're working on a extended stay hotel, you come in, make it more efficient, do some form of conversion if there is a conversion involved. You're going in at a 10 cap, so you're cash flowing day one these investments for LPs, and then the value add there is a conversion, better management, making it more efficient. And then what type of term are these deals usually similar to multifamily, that kind of 3 to 7 years type of hold?
It's actually a little bit of a loaded question, but one thing you mentioned there was management. That's one thing I will say about this segment in particular, particularly in the economy to mid-scale segment. Management is critical, and in really having the right partners that understand the guest mix, understands that you're really trying to drive that occupancy and the length of stay at these hotels, and you're really not trying to operate them as nightly hotels because your expense ratios really just go through the roof when you do that. So that is something that I would say to investors out there is extremely important. Now, I'm sorry, what was the last part of your?
Yeah, so I wanted to
make
make
sure I add that in there.
Yeah, I wanted to make, like, as far as the term, like we like multifamily value add is usually at 3 to 7 years. Like if one of these extended stay deals are being extended, what is it? Is it a quick turnaround? Is it similar to multifamily? How long do you guys hold it for? If you
Yeah, you have there is a range. So you have some folks that just like to, do the turnaround and flip it. So you do have that. But more often what I'm finding is that people don't sell their assets because the cash flow is so good. I was talking to a very large owner a couple of weeks ago and getting reacquainted with him, and we used to talk a lot over the years, but he has since over doubled or tripled really his portfolio, and said, I was planning on selling these in a 5-year hold, but because of the cash flow, I'm just going to keep them, recapitalize, and rinse and repeat that process. So you do have a range there. I don't think there's a one size fits all. I think the more institutional your capital, they're going to want to exit at some point to really get their return and deploy that capital elsewhere. I think some people want to ring that register, but most people that I know like to hold them for the long term, to have that cash flow base.
Got it. And how about as far as debt? What type of debt goes on? Are lenders interested in kind of extended stay hotels? What type of debt do you guys put on?
Yes, no. So typically you're looking at sort of regional bank debt. You could also do SBA with all hotels, but extended stay, you could do SBA loans. Actually, the credit unions are actually pretty active right now as well. You can do CMBS loans, and obviously the private debt community is very active right now. But deals are getting done. I'm trying. I actually have 2 deals under contract right now. We were able to secure debt for those, and so it's more expensive than multifamily, but you're buying at a higher yield.
Yes.
So
Right.
Yes. You talk about deals that you're looking at. Talk to us about your criteria. I mean, with us here at CPI and most multifamily value add investors who look at institutional, we're looking at 100 plus stores that provides that economy of scale. Can bring on a third party property manager for or be vertically integrated for a discounted price because of the number of the doors. Is there a sweet spot? I know I'm pretty familiar with build to rent, single family rental portfolios and communities as well, which that sweet spot is between that kind of 60 and 90 single family homes in a community. Is there a sweet spot for a number of doors for extended stay, or sky's the limit?
that's a great question. As you know, when you're in it, the answer is it depends. But most people like to try to target that 100-unit hotel, and it really because of the relative fixed cost nature of these hotels. Very low number of employees. So really the more units you have, the more you can really drive your profitability at these hotels in particular. There's not really that variable cost increase after 100 units or so. Now, that being said, I am, looking at smaller units just because it may be a good market or it may be mismanaged. There's a lot of the reasons why you may go lower, or you're just getting a great cost basis, which is the case for the 2 that I'm working on. Just got a great cost basis, and so I'm like, you know what? It's 2 of them, so I'll take them. It's like 165 units with the 2. So I'm like, that's okay. I'll look at it sort of as a fund and as a commingled one deal. I'll look at it as one deal. But most people are really looking at that 100-unit. You get 100 units, you can really drive profitability at these hotels.
Nice. Awesome. We're trying to kind of get through as many questions as possible, but talk to us about, I was looking at an article that maybe I misread it, but it was saying that extended stay hotels could be more affordable than multifamily. Is that even possible? Or did I read that wrong?
I think, it's probably more that's right. When I look at the portfolio of hotels that we had, at Brookfield, our average nightly rate was about $50, believe it or not. And so, if you're going to stay for more than a week at a time, you can buy that rate down. And so you're really buying a weekly rate at some.
This is extended stay, not your average hotel you're talking about, right?
Yeah, this is extended stay.
Got it.
And so that's the economy segment.
For like a month, if you stayed for a month, what would it roughly be?
Yeah, I mean, I think it would range between $1,500 and maybe $2,500 a month. Now, keep in mind, you're not buying your furniture. You're not cleaning your room. You're not paying for utilities, and all of that. So when you add that in there, depending on the
and not a 1-year lease, not a 1-year, you're not a 1-year lease.
You don't have to come up with a down payment as well for the lease. You're not coming up with security deposit and that first month rent and a pet fee and things like that. So when you add all of that together, for many people, it's a more effective, cost-effective solution.
Yeah, Damon, have you ever had to ask a guest to leave because they've stayed too long?
Well, so I've always concentrated more on the investment acquisitions and the development side, but I can tell you there are lots of stories of that. There's stories of litigation where you're trying to get someone to vacate the premises.
This is still extended stay is still considered hospitality. It's not like a multifamily. You don't have to go to. So does it still involve litigation? You can just get the sheriff to come kick the person out, no? Or how does that work?
Yeah, it depends.
Okay.
It depends by jurisdictions, what tenants' rights are in a particular jurisdiction. It can be complicated, and without trying to get into the particulars of
Yeah.
all of the various situations. But honestly, if there are investors or prospective developers looking to get into the space, they really need to check the local laws to make sure, similar to what's going on with short-term rentals, especially in Florida right now. As we all know, you really have to watch the use and look at the zoning and to find out what tenants' rights are and whether or not it's sort of embedded, whether or not you're in a hotel or not. They're there for a certain period of time. Maybe tenants' rights will kick in to that scenario. So these are all things that. So that's why I go back to the management. You really have to have good partners in your management companies out there that really know the space well.
And these are third party, or these are people like W-2 employees and managers you hire inside the hotel to kind of be focused on it, or how does that work as far as management?
Yeah, so I've always been associated with third-party managers. That's also part of the strategy that I have today. I've partnered with, really a world-class manager that will manage our hotels. But there are several in the space, depending on which brand you're looking at, depending on which segment of the space you're looking at. There are great managers out there. Now, that being said, as I mentioned before, most of the hotel owners are, family and friends, some family offices. So there are some self-managers out there. And obviously, depending on how many hotels you have. So there are a lot of self-managers out there, but they know their markets well. They know their markets well. They have great networks in those markets, whether it be attorneys, management companies to help them know the lay of the land in those locations. But if you're looking to scale like I am into multiple markets, for me, third-party management is a must for these hotels. But
Right.
it's similar to multifamily. I've owned multifamily, both corporate and personally as well. It's very similar. I personally think having a great manager, or at least if you have an employee as a part of your team, a very experienced manager that knows all of the laws, is very similar in my experience in extended stay
Yeah,
hospitality.
in hotels, I mean that manager basically runs the show.
Yeah.
That can make it or break it is that hotel manager, because they're even more involved on the multifamily side of the business. So no, that's great. And now have you launched a fund yet focusing on these? Are you kind of out there looking at deals, looking to syndicate your next deal? What's your involvement currently in the space for extended stay?
Yeah, definitely on syndicating right now. So I'm on the phones talking to investors. Really, trying to aggregate those relationships and trying to warm up some of those relationships I've had over the years, and forge new relationships as well. But my goal is really to provide access to investors, not everything from your accredited investor all the way up to your institutions that aren't in this space. And what I'm finding out is there are a lot of people that don't know about the space. And so it's been a largely education process on my part, but we're getting started with a couple of syndication deals. I have a good sized pipeline based on the relationships that we have in the industry. And so the goal is to take these syndication deals and really seed a fund
Got
down
it.
the line.
Got it. And these are core plus value add deals?
Yeah, mostly value add and
Value.
conversion deals. That's the
Okay.
concentration right now. But we have the capability to develop, but thinking where we are in the cycle, it's better to convert at the
Awesome.
moment.
All right, man. This
Nice.
is really cool. Yeah, we'd love to bring you on after you close on one of these deals, and we'll continue the conversation after
Absolutely.
line. But if you don't have any more questions, Ava, we can move to the next segment of our show.
Let's do it. Let's do the next segment, the 10 championship rounds to financial freedom.
And yeah, and we're gonna at the end of the show, we're gonna put how people can get in touch with you if somebody's getting excited that they want to learn more or they want to see how they could invest. So that'll come up shortly here. Perfect, Ava.
All right, Damon, are you ready for our series of questions?
I think so.
Okay. Okay, here we go. The first question. Who's been the most influential person in your life?
Oh, person. Definitely my parents, probably my dad the most for sure. I got blessed with a good set of parents, and so definitely most influential for me.
Nice.
Nice.
All right, number two question. What is the number one book you would recommend?
Ooh.
Doesn't have to be financial, it could be anything, personal development, anything.
Okay. Number one, I mean, probably for me, I do a lot of mentoring and things like that. For me, it was Rich Dad Poor Dad.
Okay.
That really just gave me that different mindset of shifting to a more of an entrepreneurial and a different investing mindset. That's probably the book. Right behind that would be Snowball, Warren Buffett's biography.
Oh, cool. I never heard that one. Okay. Thanks for sharing. Next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
Oh man, trust yourself
Mm,
and take more risks.
Nice.
nice. Okay, next question. What's the best investment you've ever made?
I feel like this is a trick question, but I would say probably in myself. I mean, definitely, I've made some great actual investments for monetary purposes, but I think betting on yourself, really just, pouring, whether it's education or, really seeking out mentors or really just investing in yourself. I think that is probably the best investment over time.
Nice. Instead of the S&P, it's the SME.
Yeah.
Oh, nice one. All right. That's a good one.
I agree. Yeah, that's right.
All right, awesome. Next question. What's the worst investment you've ever made? And what lessons did you learn from it?
Ooh, worst investment. Probably Tesla stock at the wrong time.
Oh, Tesla
At
stock
the
was.
wrong time.
I know my friends have retired off Tesla stock.
It's true, but
Time.
I put a little bit of cash in, when it was I bought into the hype a little bit. It went against every bone in my body, but I tried it and
Yes.
it didn't work. So
Picking stocks is very difficult and risky. Okay, perfect.
Absolutely. Okay, next question. How much would you need in the bank to retire today? What's your number?
oh, what's my number?
Yeah.
Ooh, I don't like to talk numbers, but it's a big one. It's a big one. I would say north of 10M. I would
All
Nice.
right. All right.
Nice.
All right.
Okay.
That's pretty common answer. Vivian.
Yeah, yeah. All right, next question. If you could have dinner with someone dead or alive, who would it be?
Ooh, anybody.
Anybody.
Well, for me, personally, my faith is a big part of my life, so probably Jesus. That's my real answer. Right after that would be probably Warren Buffett.
Nice.
Nice.
I think Jesus is one of our top ansers there.
We actually get that.
But you need a translator because he's going to be speaking Aramaic to you.
Yeah, it's true. But it's one of those things where it's like outside of, putting the faith part aside, just someone who's really so influential. And it's just, I mean, how many years have passed? Like, what was this guy really like? I mean, that's
Yeah.
really
There's a great book. There's a great book by Reza Aslan that actually goes into the times and life of Jesus. At that time, how did the world look like? So if this man was living at this time, how would he be living his life, or when he was living at a time? So
it's very interesting.
Yeah, I'll send it to you after our call here.
Awesome. Okay, next question. If you weren't doing what you're doing today, what would you be doing now?
I really wanted to play sports. I'm not tall enough, but I wanted to play sports. I would probably be doing something in the sports world, I think.
Okay. What sport?
I love the NBA. I love the NFL. I love baseball. I don't get to enjoy it as much as I used to because, commercial real estate's an active business, but that's probably it. Sports or entertainment.
Nice.
Awesome. Okay, next question. Book smarts or street smarts?
Oh, wow. That's a good one. I'm going to give a cop-out answer because it's what I truly believe. I think it's both. I think you got to have both. In my career, I started off thinking I could just do everything street smart. And I had an accountant when I was like 19, 20. I used to just pepper him with all these questions. And he's like, Damon, you really need to know all of this stuff. And so I actually put that aside and concentrated on my education. And, the people I know who are the most successful, they do both. It's art and science. you got to be able to study, but also put it into practice and be gritty at the same time. That's my real answer. But if I had to pick one, man, I would probably go with the books, to be honest.
Yeah.
Even though I'm more of a street smart kind of guy. I mean, I think you can make more with being book smart.
Risk averse answer. All right.
Okay, last question. If you had $1 million in cash and you had to make one investment today, what would it be? Today.
You invest in extended stay.
There you go. He invest in his own fund.
Exactly.
Yeah, I mean, today, I mean, that's what I'm doing. So I can't give another answer.
Awesome. Okay, perfect.
Amazing,
Damon. Just quickly let people know what's the best way that they can reach you.
Sure. I'm on LinkedIn, but also my email is damon@eternalcos.com.
Nice. And we'll share that in the show notes.
Absolutely, we will.
Hey, man, thank you so much for coming on in such short
Thank you both for inviting me.
Really appreciate to share all your wisdom and knowledge with us, and looking forward to you grow, and hope to see you, get bigger and close on a lot of big deals, and really appreciate it, man.
Yeah, absolutely, David. Thank you so much for your time.
Thank you both.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.